Well, good afternoon. Good afternoon and welcome. Welcome to another of our Webinar Wednesdays. It's great to be here on Inauguration Wednesday. Seems like we're running up against some pretty tough Wednesday afternoon competition for our webinar series. So we're back for the Managing Your Small Business Through the Pandemic webinar. This is a series that started back in March of 2019 for obvious reasons, and we're up to number 45 of the weekly webinar series, an update on a lot of the pandemic programs to try to assist small businesses navigate their way through the pandemic. So good afternoon, I'm Kelly Bearden. I'm the director of the CSU Bakersfield SBDC, Small Business Development Center. And as part of the SBDC, we are a part of the California's SBDC, which are five network programs, regional and by nature. Our Central California region, talk about frequently, Central California counties, 14 of them. There's also a region in Northern California, in Los Angeles, Orange County, San Diego. Here at CSU SBDC, we cover three territories, very substantial territories, geographically, I might add. We cover Kern, Inyo, and Mono counties. So we cover the southern part of the San Joaquin Valley and the Eastern Sierra. And in addition, we have throughout our Central California region, which is, my map is almost correct, and I will change this one day. And a few years ago, they took out Santa Clara and Santa Cruz and moved it into Northern California. But other than that, it's correct. And 14 of the best counties you'll find, as I'm common to say. We have a center at Clovis Community College, at UC Merced, also in Modesto, at Opportunity Stanislaus, in Monterey County, and also down in San Luis Obispo with Cal Poly. So if you have any needs, any small business questions, anything you need beyond the scope, and you're located in any of those areas outside of Kern County or Inyo or Mono counties, please contact those individual centers and they will do their best to assist you with some of the fine consulting and advisors that they have and some training programs to meet your needs. Okay, so wow, January 20th, 2021. So what's up today is I break every rule in the book continually with so much text on these slides, but there's a lot going on January 20th in a new year. So today, Joe Biden becomes the 46th president of the United States. As mentioned earlier, we are up against his inauguration today as far as competition. A couple of weeks ago, it was the incident at the Capitol. Day before Thanksgiving. Maybe we should have done this on had webinar Tuesday, but it's webinar Wednesday and it's been that way for a little while. So today we're also going to get into some of the PPP. We do have a little bit new guidance that's out there on a variety of issues. Not totally a lot of guidance, but some more to kind of patch things together, and it's coming together faster than it did the first round for PPP. A lot to digest. If anything, I am suffering from information overload, and my goal today is to try not to pass on my affliction to you. So hopefully we will not be storming you too much information, even though there's a lot of complexity to a lot of programs out there. So beyond the PPPs today, we're going to take a look at the employer retention tax credit. And so the Employer Retention Tax Credit is a program that we'll get into a little bit today. We've kind of ignored it as part of the new legislation, and 3.5 weeks in, it shows some real promise for a lot of our businesses. In the past, this conflicted directly with those that received a PPP. So if you had a PPP, then we had an issue because you really couldn't claim both that and the ERTC, another fine acronym that we get to memorize. So we'll do a brief recap of the California Relief Grant Program as far as what happened with round one. They've announced dates for round two. We'll get into that. The Current Recovers Program, the PPP portion. Remember, that was a trial program that started back in July of 2019. Wasn't sure if it'd last a month, and now it's in its 7th month. But it is sunsetting, and we're going to talk a little bit about that today because it's basically your last call to get free PP if you're located in Kern County and working with businesses here. briefly discuss the COVID testing and not much on vaccine update, but that is something that we'll probably get into a little bit more in future webinar Wednesdays. So we do have a bit more guidance on some of the shuttered venues and some more information to pass on the EIDL grant, along with your questions. That if you have questions today, please put them in the Q&A box. So we have a question and answer session, and we'll get into that at the very end of the webinar. And we have a poll and more. And hey, I got a disclaimer a few weeks back you probably noticed. And keep in mind, this information changes often and is based on our current understanding of the programs that we discussed today. It can and likely will change. We encourage you to consult any professionals that you work with as far as legal, accounting, financial, or your SBDC. So we'll do our best, but really a lot going on out there. So before our poll, we're going to hit these just testing sites, just let you know again, you know, the COVID numbers are still kind of off the charts and a huge problem with getting our small businesses back to where we want them. And anybody with symptoms, we encourage them to get tested as always. These are the ones in Kern County that we're going to share with you today, but we'll jump to our poll now. So, you know, I really wanted to, as far as the poll, as I set up our poll question today, I really wanted to jump into, and we'll do this next week. I'll give you a heads up for next week's poll. We really wanted to get into, with the new stimulus programs out there and a number of programs, we really want to find out where you are leaning and what direction you want to go. But then we realized that that would have to be at the end of today's webinar after we present more of the information to give you more guidance and some of the information that has been released by the SBA, IRS, and other sources, and try to do that. So instead, we have a little birthday coming up here that we're going to talk about. So we'll do somewhat of a lighter version of the poll today. And our birthday is Webinar Wednesday, celebrates its 8th birthday this weekend. And as you know, we're proud of Webinar Wednesday's 8th year reign now, coming up on that. And it's been incredibly or somewhat mobile where we've been able to do this. I was told once that all you need to do a webinar is all you need is a portal, a microphone, and an internet connection, and a jerk. And I said, well, that's 4, not 3. But I took offense to that slightly. But anyway, so that means it could go very well mobile, and has. And so our poll today is, which community has not hosted a live webinar Wednesday? Yeah. So I know it's a best guess pop quiz today. We'll launch the poll right now. Which community has not hosted a live webinar Wednesday? And we're sticking within our 3-county geographic region, where we'll say Taft, Bishop, Mammoth Lakes, Ridgecrest, or Edison. Okay, Taft in Western Kern County, and Bishop in Inyo County, Mammoth Lakes in Mono County, and Ridgecrest in East Kern, and Edison about 10 miles east of Bakersfield, little community of Edison. Going to give you a couple more seconds in order to jump in. Whimsical poll question today on which community has not hosted a Webinar Wednesday, to celebrate a little bit of Webinar Wednesday's 8th birthday coming up this weekend. So what we're going to do is we're going to close this poll, give you one last second to jump in. And okay, we've got about half of you that have voted, like the whimsical question. So which community has not hosted a live webinar Wednesday? And you're telling me it's Mammoth Lakes. Second choice was Edison. Mammoth Lakes, 36% of you, 33% for Edison. We'll stick with those two right now. And the correct answer, even though I've spent an incredibly amount of time there, is Edison. So Greater Southwest Edison, as I call it, has not hosted a Webinar Wednesday. We'll work on that. So thank you. We've been in Taft early on, and then the City of Bishop, been in Mammoth Lakes at least once, maybe twice, and in Ridgecrest. So thank you, and thank you for voting. And let's now get on with the serious aspect of our program today. So jumping over here a little bit to what we see as far as some of the things that we need to get into. And one thing that we did over the summer is, if you recall, for those of you that were along with us for the ride for the summer, was we were speculating since July or August on what our favorite stimulus might be and what we wanted. And a lot of this was happening through our very own poll questions and coming up with what our small businesses really felt they wanted and needed. And so I thought it was nice to reflect back on that now that we're basically 6 months later and have a new stimulus, and compare to what we kind of wanted from Congress. And these were congressional fixes only that SBA couldn't do, that required appropriations or new money or something else that needed to happen with a new stimulus. And so you were telling us back over the summer that you wanted some type of blanket PPP forgiveness for your PPP loans, to where you could get some type of automatic forgiveness, or for those that were 150 and less, for $150,000 PPP loan and less. And so we didn't quite get the blanket on that, but we got pretty darn close. And soon we'll be getting a one-page PPP forgiveness form that we will be able to use for forgiveness for 86% of you that received a PPP less than $150,000. The other item that was pretty popular this last summer was what we called Fix the $120 billion tax mess. And we had some published reports that the amount of income tax that was going to be due if the proceeds from a PPP were not deemed as tax deductible, collectively between the 500 and something billion out there in PPP, it was going to be about $120 billion aggregate. Well, that got fixed in the next round. The next item you wanted was a PPP2. And we got PPP2, and we'll be discussing that today. It's funny, when I look back, we had a slide after this, and we'll show that up to you next. Pull that up next and actually look at what we thought PPP2 would look like back in early August, late July, that time frame from when we talked about it. We wanted a modified pandemic version of the SBA 7A loan, which was rumored to be floating around Capitol Hill back over the summer. We didn't quite get that. We did get some debt relief for those that have current 7A loans. And if you get a SBA 7A loan or SBA 504 loan, you can get anywhere between 3 and 8 months of that loan paid. So even if you closed on the loan today, you could get up to 8 months of that loan paid in advance moving forward. And also, one thing that we saw in the program was the new the new stimulus was relief options for underserved markets. And underserved markets are classified and termed as generally individuals that have historically been harder to serve. And those include veterans and rural businesses, people of color, minorities, and women. So there are some enhancements in the stimulus that work to that. So 4 out of 5, I kind of like 4 out of 5. So when we were looking at our PPP over the summer and said, gee, what would a PPP2 look like? And being floated around was $190 billion in funds for the program. It had bipartisan support. The $190 billion is turned into a $284 billion, which includes also the PPP1 for those that didn't get in the first time. At first, we thought it was going to be a 50% reduction in revenue, which I think we're finding now the 25% is, for some businesses, even a challenge, and really shows a business that has really been harmed at the 25% level and 30% level. So the 50% reduction in revenue would have been difficult, and it would have been a smaller program. We talked a little bit about who might receive a second PPP, what industries, if there was any specific industries that it would be geared toward, or specific NAICS codes. And where we just saw mainly the overall reduction of 25% in your sales from one quarter in 2019 compared to your pandemic results in 2020. We only saw NAICS codes pop up with the 72 series that we've been talking about, where you can get a larger second draw of PPP. So, and then we talked a little bit about what maybe small businesses should prepare for. not knowing what would come down. So in retrospect, that's kind of what we talked about through many of the webinars when we were looking for that second stimulus, that next thing that took the place of the CARES Act and really came into place. And one of the parts of the Consolidated Appropriations Act is the Economic Aid Act. And I'm now finding that there are a couple of acts inside of that. But the Economic Aid Act was geared toward those programs that were to be managed by the SBA. And those include that second draw of PPP. So we got the second draw of PPP. One thing that was nice also was being able to add some businesses and certain nonprofits that weren't eligible the first time around for the Paycheck Protection Program. So it opened it up to new firms and new opportunities. And also there was a great deal of concern with some businesses that qualified for the PPP about what the rules would actually come down with, so they didn't get in. Something we didn't see on the horizon was the events, theaters, and venues, the $15 billion that's available that we're still waiting for more guidance on, but we'll go over what we have on that today and received a little bit more and maybe some more resources if you're really interested in the shuttered venues and other programs of that $15 billion that's available. We have the EIDL advance, the EIDL loan. We had the EIDL advance last year, and now we have the new EIDL grant, and more information is on that we'll share today. So there's 4 of our big 8, and I know our big 8 started as big 5 3 weeks ago, and it will not go to big 9 next week, I promise you. Number 5 is going to be PPP forgiveness. Some of those easy changes that we had hoped for have come to fruition, and while we're still waiting the final form and an opportunity to discuss that with you, the changes that are in the law are meaningful and will really impact a lot of businesses and really enable them to avoid a very strenuous and very baby ardent process with their bank that would have been probably inundated as well. And also we have some new expenses that can actually be used retroactively. If you have these expenses that occurred during your covered period, they can now be used to meet your full amount of forgiveness or even a larger amount of forgiveness. And remember, that's going to be important, as I want to repeat this a couple of times today, that a couple of the second draw requirements are that you have spent your entire allocation of your first PPP and that you that is one of them that pertains to the PPP forgiveness. We'll get into the other one later. Tax deduction for the PPP, we talked about that. That's in the new Economic Aid Act. And also the PUA on unemployment for displaced contractors, which could be part of the Unemployment Aid Act as well, the Economic Aid Act as well. For displaced contractors, and then again, the employee retention tax credit that has been amended and extended. So before we leave the overall theme of the big overall picture of stimulus, last week, Joe Biden came out with a $1.9 trillion package that he is going to float as his first stimulus package once he becomes president, which I think happened today. I haven't had the TV on, but you guys work me too hard. So I miss out. And Joe Biden's $1.9 trillion package includes a bump in individual stimulus checks to $2,000. In the current Economic Aid Act that we didn't cover, there was the $600 stimulus for individuals. This would bump that $600 to $2,000, so it would be a net gain of $1,400. It also, in that act, if it's passed by Congress, would increase the unemployment insurance up to $400 weekly from the present $300 weekly that's currently in the act, and also extends it until September of 2021. The paid leave, it expands the paid leave and increases the child care credit. Some of the paid leave and family leave measures expired at the end of the year. This would expand paid leave and also increase the child tax credit for individuals. And it provides for vaccine distribution and also state and local government relief in addition to other things. So that's what we might be talking about in a few weeks, but today we're going to be talking a little bit about the employment tax retention credit, because this is certainly something that kind of fell off our radar through the 45 weeks that we've been coming in here every week. And there's a very good reason it fell off the radar. It fell off because many of you, or most of you that were attending on a weekly basis, had a PPP loan and were looking at ways to actually get forgiveness for that PPP, or to look for clarity on actually spending it correctly and within the guidelines that would actually constitute full forgiveness. And most of the individuals wanted full forgiveness. Well, in dealing with that, we did talk briefly about the employee retention tax credit, but it was kind of geared for those that did not receive the PPP. And actually, if you had a PPP in 2020, you could not get a employee retention tax credit. Well, that was until December 27th, when the Taxpayer Certainty and Disaster Tax Relief Act of 2020 was enacted. And so when that was enacted, it was amended and extended throughout until June 30 of 2021. And it took away that provision to where you could do both. Now, one of the main things you need to know about this is that whereas you can have a PPP and you can use the employee retention tax credit moving forward and retroactively, the key thing to remember in all that is that you cannot use, if you use PPP funds for payroll, you cannot use those same funds for this tax credit. And the tax credit now jumps up to about $14,000 per employee. So it's rather substantial. And it will benefit a number of businesses that are out there that maybe don't qualify for the second helping of the PPP, or maybe they do and they use it for broader purposes or have employee gains, and it's where they're adding employees. So it's really something that we're going to be taking a look at. Matter of fact, let's jump to the website, and let me start my share again and jump in right here to a website that doesn't want to pop up, apparently. Isn't that a shock? So let's go here. And finally, we're there. Boy, yeah, that was a workout. So here's the IRS website I just wanted to jump to. And this won't surprise you, but there hasn't been full guidance on how to use this moving forward, but this is something we'll be looking at. And you do see the alert that it was enacted in 2020 and has been amended and extended through 2021, part of 2021. And it gets into a little of the details here that are not correct. Because see here, it says the limit is $10,000, where it's now gone up to $14,000 in the regulations. So whereas their FAQs are not up to date, they have promised that they will be updating these sometimes in the near future, and is a good resource to go back and look at if you think that this is something that will benefit you moving forward. So while we're looking at a couple of websites, let's jump into this one real quick. Let's jump into the current recovery, since we did mention that it is going to be expiring at the end of the month, and it's really kind of your last chance to get PPE. It's been so easier if they had taken my acronym, the 3P for the Paycheck Protection Program, but PPE includes mask, sanitizer, gloves, and has benefited over 1,900 businesses in Kern County. And if you collectively look at the wipes, gloves, sanitizers, and masks that have been distributed, over 150,000, nearly 150,000 of those PPE that have benefited over 46,168 employees. So last call on the Kern Recovers PPE. Again, the program is going to end the 31st of January, so get your PPE before it is gone. Okay. Going back here. And moving on. So one thing I wanted to kind of point out today, that what we're seeing that almost all of these stimulus programs that we're discussing require some reduction in revenue, almost all of them. And they have different ranges and different requirements and different periods, it seems like. So really, it's not one fits all for each individual program. We'll get into a little bit of the EIDL grant starting at the bottom here, which is going to require a 30% reduction, and there is new guidance on that. The shuttered venues, save our stages, 25%. PPP second draw is 25%, and the employer tax credit we just talked about a little bit is not only 20%, but it's 20% with 2 percentage signs after it. Don't know how that happened, but it did. So good thing to remember, if you did not have a reduction, many of these programs are not going to apply to you. So really with this stimulus, it really went after those that had been most impacted and tried to make the biggest difference for those that have been impacted through this problem that we're having. So, and again, a little glitch. Give me back my cursor. So, looking at kind of what's a couple things that I wanted to get into today as well. And we had talked about, I mean, this is as good a time as any. So one thing that we had looked about in the past and we put out last week was our spreadsheet to help you with your PPP calculations. So let's look at that before we get into a little of the discussion on that. We do have this available, and we'll make it available with all of our links that we display today. And for those of you that don't know, that comes usually in a bulk email, kind of like our invitation each week, usually Monday afternoon, evening, sometimes Tuesday morning. It comes the same way as a bulk email. Sometimes they can end up in your junk, your clutter, or your other folder. But generally this will be included, and it has a little minor update that I made to it. It really didn't change much, but last week's that we sent out had a slight glitch with one of the formulas, or a couple formulas here in the spending summary. So that has been updated, but this is a good tracking tool. If you have something, if you've had a previous PPP, it's, I think, really helpful, because what it can do is make sure that you allocate the proper expenditures and put those in the right place. Remember, this isn't accounting. This is a covered period that you're going to have generally for 24 weeks. Most people elect the 24 weeks. And so one that you take out on the end of January will run all the way down here until the 11th of July. So in going back over your last one, I think I mentioned this last week, but it bears mentioning again. If you were short of your PPP1 and you wanted a PPP second draw, what you can do is you can look at a few of these other expenditures that have been added. Before, all we had was these gross wages over here. Before, all we had was rent and some of the utilities and some transportation and interest on mortgage. But now we have these other 4 items that we're waiting a little bit of guidance on, but should be out soon. But we have 4 new items that you can go back retroactively to your first round of PPP and include that. And this isn't accounting where your accounting year ended maybe on December 31st. This is going through your covered period and putting those expenses in their proper location. Now, you can't take a January 2021 expense and move it back to your covered period. But if you had an expense that you previously didn't allocate in any of these 4 categories, be it personal protection equipment, and that could be anything from the PPE that we had mentioned from the Current Recovers website, but it could also be some enhancement that you made in your workplace. It could be some of the changes that you made in making your employees safe and your customers safe, or being able to operate your business again. And that could be anything from plexiglass shields to other type of enhancements that you made on your particular building or layout in your workplace or office. Also not covered the first time was supplier payments. And supplier payments, I think, have been identified as current supplier payments. So Whereas we're hoping for more guidance on this soon, I believe that means that you can use payments to your suppliers that you couldn't use before. But what you can do is you have to use current ones. So they probably are going to be within the covered period that you have. And if you recall, in looking at our spreadsheet up here, your covered period is generally the date that you get your PPP. You can also select an alternative covered period for payroll purposes to where you can go back and pick up time that was in the payroll that you had before you received those funds in your bank. Or it could be at the end of your period for actually a payroll that went up to a certain period. So in this case, it ended on January 11th. Say your payroll period ends January 15th, you're able to pick those up. So I'm thinking that that's going to be the supplier payments. So anything in your covered period, but something that maybe is not, 3 months behind. So if you had like something that was 90 days late, I think that's what they're going to mean by current supplier payments. Covered operating expense is kind of a buzzword, and we'll get into that briefly, but covered operating expense can be picked up, and in what it was, I think, mentioned and designed for, further guidance will make this clear, is a lot of the software and other enhancements that you needed or required in order to operate your business. And a lot of businesses moved online during the pandemic. A lot of them required cloud computing and shopping carts and other type of enhancements to sell their products online, or maybe to better promote their services online. And we expect that to be part of those covered operating expenses that were there. And then also one that we, at least in Kern County, probably won't see much of, but in other areas there could be, and that's covered property damaged from any of the disturbances that happened during your covered period. So those are kind of the main things that are different as far as the expenses that we have. Again, this sheet, we provide a budget sheet and then an actual to kind of go in. I think it's a great idea to kind of allocate out how your PPP is going to go. If you get a second PPP loan, it's maybe a good way to allocate your payroll expenses, and maybe your strategy might be, since we like to talk strategy here, might be to, if you're able to benefit from the employer tax credit, maybe in the last quarter, is to spend more of your money on some of these expenditures, but still hit your 60%. I think during PPP, we experienced a lot of businesses, numerous businesses, and I think it was something that I would advocate. Be safe, spend your money on payroll. And, as we've got more guidance, we've got down the road, we're 45 weeks into this mess, we've learned a lot. So now with this, the strategy might be to actually, you got to hit that 60%. 60% is not an arbitrary figure. You got to hit the 60%, but then maybe cover your 60% by a little bit of a cushion and allocate the rest of the expenditures in this area to where you can maximize your benefit from the employer tax credit later. And that's what the budget is for. So we also have an actual to where you can go in, because we all know that budgets are great, but sometimes they don't reflect what is going to actually happen, and gives us that opportunity. Here was kind of our example that we had from PPP1, which was our Kelly's Grill fictitious business, of which we actually did our $100,000 PPP and kind of demonstrated over time how that actually played out. So $100,000 PPP made all this exercise useless, where we thought we were going to have to report each employee's wages and bring each employee back, but that with the $150,000 is now $150,000 limit on PPP forgiveness. It seems futile, but maybe something you still might want to track, or maybe just document with your 941s. And we had a few other scenarios that we had, and we changed a few of these with the multiplier, because as you now are knowing, if you have a 72 NACE code, which is accommodations and restaurants essentially, you can actually go with 3.5 months payroll of your 2019 payroll and some other changes to that if possible. So here we have both a restaurant, we have a inn. So what we did was just kind of go through and look at that. And with this, we determined that there's generally in those two NAICS codes a 40% raise, a 40% boost, a 40% larger second draw of PPP for PPP second draw. Okay, let's try a new share here and hopefully likes me again, and it does. So just getting a groundwork of where we were, frame. Again, just remember, we got to spend all of your first round draws in order to qualify for the second round. Again, I said I'd mention this a couple of times. I probably mentioned it a couple of times next week. You got to spend all of your first they all have to be in eligible uses. We went kind of through the uses there. And it's not only the old eligible uses under the old, it's the new as well. So remember that. The expenditures we went through that were common with the PPP and are common with either the second draw of the PPP, or if you're getting your first PPP, those expenditures. So also we talked a little bit about the PPE right there and covered the 24-week period. So let's move on. And we're looking at, again, the second helping here. Couple things still unclear on the ag rules, and also I'm not going to get into it in much detail, but entities that have ties with China really need to look into that. Seasonal employees, and I know we have a lot of seasonal workers, particular employers, seasonal employers particularly on the Eastern Sierra and in those kind of resort type communities, and we will get into that very soon. And again, one of the things that was common and was one thing that we really liked about the new stimulus was that you actually, when you went through the PPP forgiveness process, if you recall, before the EIDL advance that you received was going to be taxable, that has been stricken from the record. Didn't mention that earlier, so let's bring that up now. There's your definition of an economic loss for EIDL purposes. And again, EIDL is going to use the 30%. But one thing that's really different about EIDL also is it uses a comparable 8-week period. So whereas we're talking about, in many instances, a quarter, generally 3 months or 3 months, we're talking about an 8-week period, which is generally 2 months. So that is one of the aspects that's going to be different from the economic loss. And so shuttered venues. Shuttered venues, we don't have a lot out there, but there is a lot to discuss. I am getting questions from individuals that are concerned about not having the guidance yet on shuttered venues. We do have in our handouts, in our email this week of our links, we will include about a 13-minute brief webinar. It has a couple of tips for those with shuttered venues, but it really promises more and kind of gives you information to where they will be back. SBA will be back providing more information on shuttered venues, and this could come as early as Friday. I think they're getting really close. It was a well-drafted part of the legislation that seemed a lot of thought went into to try to really have the $15 billion in grants for those venues that were dramatically impacted by the shutdown and literally had shuttered venues, rather than perhaps, a restaurant with a little corner set up for open mic or whatever, karaoke. So shuttered venues, again, lesser of 45 million or 45% of the gross revenue earned. I believe that is going to be gross revenue earned. They do have another measure for ticket sales, of which really could be part of the eligibility in the final rules, of which 70% of your revenue must come from ticket sales. But again, I hate really speculating on this because the rules are really meant to help venues that are shuttered that they had talked about. being it, live music venues, comedy venues, museums, cultural and other event centers, both for-profit and nonprofit. So I really hate to get it too much into this. I know that there's a lot of concern with people because you cannot combine it with a second round of PPP. I believe the rules on that are going to be, if you're concerned about the qualifications or the eligibility, if it was me, I would probably apply for the second round of PPP, but I would not take the second round of PPP. I would let my lender know that I'm applying, but I am going to compare the benefits that you would receive from the shuttered venues. That would be something I would do. So then we don't want you left out in the cold all of a sudden in the PPP, which we believe is going to be around for, at least I believe is going to be around for quite a few weeks. And that is because the guidance I received yesterday that we might look at briefly, but it is really kind of the rules on and the determination, and the lenders have to get up to speed on this and a few other things. So, there is a set aside for smaller venues, $2 billion for entities 50 and fewer employees. So it's not going to be your fabulous forums and a lot of your huge venues, your sports venues potentially, which would probably be outside of the qualifications anyway because of the actual aspect that they are not considered small businesses. So it'll be interesting to see when the guidelines come out on that, the final guidelines, and we will have them for you once we have them. So let's talk a little bit about the targeted EIDL advance, which we have new information on. So targeted EIDL, which is of course is an acronym for the Economic Injury Disaster Loan, the SBA Disaster Loan, which you can apply through a portal through SBA directly. The PPP, you're going to want to go through your bank. You went through your bank last time, and I recommend strongly that you use the bank that you have a banking relationship with now, or you received your first PPP with. Those would be my two best shots at it. If I have a local connection, I have a banking relationship, I have a bank I deal with all the time, I would have gone through them with my first PPP. Some lenders did not participate, and you were left to go find another source. And maybe it was a fintech source or another lender, but those are out there. So with this one though, you go through the SBA portal, and the EIDL loan up to 150 is still open, will be open the rest of the year. So please take advantage of that. If you think you need an economic injury disaster loan, there is a qualification process through that. So, but do go through that if you particularly need funds in order to sustain your business. So again, the eligible for this EIDL is going to be, the targeted EIDL are going to be those individuals, first of all, that received an EIDL advance. So if you applied for the EIDL loan last year and received an advance between $1,000 and $10,000, you could be eligible, at least in the first round of things. And if you received a $10,000 EIDL, you've received the maximum amount. So it's essentially between $1,000 and $9,000. And we talked a little bit about the low income community. Our poll last week was on actually one of the determining factors of what they classify as the low income community, 80% of the statewide median household income. And you have to have less than 300 employees for the targeted EIDL. Again, the low income community, and you must demonstrate a 30-week reduction in revenue during any 8-week period from March 2nd until December 31st. So many rules to keep straight, I know. And I am information overloading you, and I apologize in advance. So a lot of this is the reasons why we send out the copy of this recording and all the links. So it'll be clear to you as you move on. So the targeted EIDL advance now, this is kind of the new guidance that we've received in basically the last, actually I received it this morning. So at this point, there is not an application process for the targeted EIDL advance. And that right now is between $1,000 and $9,000, depending on the reciprocal amount of what you received earlier. SBA will reach out to EIDL applicants that have already received a partial advance. So if you've already received between 1 and 9,000, you will be contacted by SBA. SBA will be contacting you via email with instructions to determine eligibility. And then really something that I really wanted to, and SBA is making a point to really make a note of, is this very last bullet, is they are anticipating, or they're already starting, well, I guess they're anticipating that there will be, or has been in the past, misuse of their @sba.gov. All communications from SBA come from sba.gov. Be wary of fake email addresses ending with anything other than sba.gov, but particularly sba.go. So there's potentially a chance where people will get your information that you might think you're sending to sba.gov. Send it to sba.gov. So again, on the targeted EIDL advance, just to recap, if you received a $1,000, you could receive up to $9,000, or would receive a $9,000 if you are deemed. And it looks like what SBA is doing with this is they're taking actually the information that they have based on your address and placing and telling by your address if you're in one of those low-income areas. And then what they're doing is taking information that they have from your EIDL advance, and they're just flipping it around. If you received a $9,000, you'll get $1,000. If you received $1,000, you'll get $9,000. And again, that will come directly from sba.gov. Okay, you thought you were going to get by today, didn't you? Without me talking about the California Relief Grant. Well, got news, so got to tell. And that news is, as you know, last Wednesday, the first round period came to a close. We do now know when the second round is going to be, and that's going to be February 2nd through February the 8th. So we start on Groundhog Day and in the following Monday. If you want eligibility information to apply for round 2, if you did not get in on round 1, we send people to our YouTube channel, which has all of our webinars and has an on-demand webinar that was created back on December 30th that kind of detailed the eligibility of this particular program. And so there's the address to our YouTube channel. And a quick reminder, this grant is for $5,000 to $25,000, and generally is for businesses that have revenue of $1,000 to $2.5 million. So a little bit about the results. So we now know kind of what the process is going to be for the results. You recall, if you applied for this program, that you went through Lindustry, which was an online portal, a fintech company that actually facilitated the application process for the state of California for GoBiz. And so what they started doing last Friday was to send out emails for the following groups of applicants. Number one, you were approved. And if you were approved for one of these grants, please put it in the chat box for us. Love to see something in the chat box that somebody has heard within 5 days that they were approved for part of the $237.5 million California Relief Grant Program. So if you were approved in round 1, and you'll be funded over a 45-day period, over the next 45 days, you could have received an email saying you were waitlisted. So those that received an email saying you're waitlisted, put it in the chat box if you want to, that you were waitlisted. Again, if you were waitlisted, you qualified, but you were not awarded, and you will be automatically entered into round 2 of the consideration for the other $237.5 million. Or number 3, you were declined, and you were declined because you had either one of the two, an ineligible or incomplete application. Now, I will be sitting in on some other information on this particular program before it opens up on February 2nd. And at the SBDC, we do know by your phone calls, where we had literally dozens and dozens each of the days, probably leading up to round one closing last week, and we've documented and discussed in the past some of the issues that clients or potential grantees were having trying to get their application in. So, our apologies, and hopefully round two is going to go a lot smoother. But still, $500 million the state of California is rolling out there. And one thing that we're not going to really discuss today, as I just kind of show you kind of a draft relief of all the programs that are on here. But we're not going to really get into the tax aspects of it yet because we're not sure about some of the other CARES Act related programs. And this is going to jump up into a couple of different categories. One of them is going to be if, say, a BCARES grant that you got and the City of Bakersfield BCARES program, which granted out nearly $5 million, and they might have hit $5 million by now. There's little known if those that were provided to for-profit entities, that is going to be, number one, considered as gross revenue by the SBA determination. And we sent this sheet out last week about what actually makes up that SBA gross receipts for the 20, 25, or 30% reduction over 2020. So we didn't jump into that today, and we're not jumping into anything based on some of the other aspects that's going to have. So there's just a brief recap of what we discussed as far as with the EIDL grant that is now changed with our guidance that has been provided early today. Didn't talk, I don't think we mentioned pandemic unemployment assistance that is right now open through March 14th. Discussed a little bit about the SBA debt relief that's been extended, and you see some of the other programs that are down below. So with that, let's jump in to our questions. Let's get into our poll question, our Q&A questions. So question number one, can you use the employee retention tax credit if you received an EIDL loan? And right now, today, I would answer that yes, absolutely. But again, we're still awaiting guidance, and guidance from that is going to come from the IRS, and it should be coming sometime soon, we hope. But you can use it with an EIDL loan. If you earmark, and you need to be accounting for your EIDL loan also, I think you could create an argument that you can't use it if you're actually paying employees with your EIDL loan and taking the tax credit at the same time. So let's say you received a $150,000 EIDL loan and you've been documenting what your expenses that you used out of that EIDL loan. So if you run into an area to where you're using it to pay employees, it could come with the final guidance from the IRS that you cannot use your EIDL loan. We already know that you cannot use PPP for that. That has already been mentioned. What about businesses that opened during the pandemic? I'm going to need a little context there. Businesses, I believe if you were open during the pandemic, I think as long as you show the reduction, and I imagine it's one of the 4 or 5 programs we discussed with the reductions between 20 and 30%. So if you were open, and even if you were open for PPP forgiveness, and remember we had some of the safe havens that were out there for employee use, that is all changing with the one-page $150,000 PPP. So kind of a generic answer to that, but can we get a copy of the Excel sheet? Yes, and if you got one that says PPP by number is number 44, throw it out and use number 45 because it does have that one minor glitch in it, or you can go in and fix the circular reference there quite easily if you know anything about Excel. If we use the one-page form, there is no need for the Excel sheet. Well, the Excel sheet is just for your managerial purposes. The one-page form will be for forgiveness. We put out the Excel sheet for you to help you manage your expenses that you might get off a monthly profit and loss, for example, and then transfer those applicable expenses to that and just kind of help you keep things straight. So the intent of our Excel spreadsheet is not to go to any funding source, any lender. It could go to your lender, but it's just for your purpose to help you manage the funds and to make sure that you hit the 60% for payroll to get full forgiveness for the PPP. Is the second round of PPP 24 weeks? Yes, it's going to be 24 weeks for the second draw of PPP. And again, it'll be, I think actually you have an election of an 8 or 24 week covered period as you did with the initial round of PPP. PP2 applications, are they open now? Absolutely, they opened this week. Now, with a lot of the guidance coming at a little later point, it's a little more difficult for lenders, but I think many lenders are open. I believe we mentioned last week the Valley Strong Credit Union was opening. I believe most of the community banks and some others opened actually yesterday. I haven't received actual verification from that. And I see you tried to apply through Valley Strong, filled out form, but didn't let you submit. Yeah, I'm not sure about that, but I am going to, I think I mentioned this last week, I am going to try to connect with many of the lenders and try to get something from a lender's perspective on local lenders. But my understanding is if they are having an issue at any of the places, any of the community banks or credit unions, I would think it would be from some of the guidance that has just been released recently on what information they need to collect that we didn't go through today. And that is going to be a lot of the information. And if you recall, we talked a little bit about last week on PPP second draw about if you have a $150,000 loan request or less, initially you don't have to provide proof that you have a 25% reduction, but you do have to have it before you file for forgiveness, or you do have to have it if SBA requests. So keep that in mind. I might have answered this, but if you applied for round 1 of the grant for the California Relief Grant, you're automatically put into consideration for round 2. Again, you'll be receiving an email probably by Friday if you were approved, if you were waitlisted. Waitlisted means that you were not accepted with round 1, but you are put into consideration for round 2. And if you haven't heard anything back from the California grant, they're hoping, I know, to get everything out by Friday, and it could be a little bit later. I understand there was a lot of frustration with being able to upload documents. We're still trying to hear, and we're going to learn from you people that applied for the California Relief Grant. You know, I know it was a frustrating process, and it was not intended to go that way. And you haven't received an email, you should receive one. And if you haven't received an email, I'd say by the beginning part of next week, please email me and let me try to do some work on that, because, you know, those that actually were not able to upload documents had an incomplete application. Since you did have an application, it should come back as either 2 forms. One should be to ask for that information or to say that your application was incomplete. And we're still learning, like you are, along that particular process. I accidentally reported 0 employees on my original EIDL grant as a sole proprietor. It wasn't noticed until the program closed, and that would be the EIDL advance. I was not given the grant, but given the loan as a sole proprietor. Can the grant be updated now, or may the grant amount be received some other way? What I would do with that is I would probably, you know, there could be some guidance on this and there could be some type of thing, but I would maybe check with, and it's online. I don't have it at my hand right now because we haven't used it in a while, but we have used a lot of the SBA call center, their SBA Disaster Loan call center in Texas. They've been very good as far as either emailing. I can send you that if you can't find it, but it's widely available online. The SBA Disaster Loan site 800 number, which I believe is an 888 number, or you can email them. I would contact them. We applied for Cal Grant, didn't receive, so I think we just covered that. And I would wait another few days, and then what we hope to do is I am actually going to be on a call tomorrow where I get more information on the second round, and there should be more that is disclosed tomorrow. I told them you should have that on Tuesday so we can make that available on Webinar Wednesday, but you know how it goes. Can you apply for PUA for self-employment job that you have claimed on taxes for 10 years if you are still working your full-time job? My answer to that would be no, because you really are still gainfully employed. And I believe the PUA unemployment is designed to assist those self-employed people who are not working at this time. We opened in June of 2020 and so far haven't been eligible for any of the PPP loans. That is correct. That is one of the things. And I've got to believe that there's going to be some type of program, be it a beneficial loan program or something that comes along in 2021 to benefit startups of 2020 that were opened up after the pandemic. I know the rationale for that is that the pandemic relief programs have been created because small businesses didn't create this mess. You had very viable businesses that were up and going, very successful small businesses, or businesses that were providing at least an income or a livelihood. And those were impacted by the pandemic dramatically. And so I think that the reason they haven't done anything so far is that if you've opened a business in say June or after the pandemic started, that you were aware of the challenges that you had in front of you. Many times I've seen some of the businesses that are open, the opportunity was in front of you. So that is about the best answer I can give you. Hopefully there will be something that comes along in 2021. So how can I benefit from PPP for my new employee? Well, right now what we're looking at is we're looking at guidance that goes from, if you hired somebody after the pandemic, it is generally going off of, in most circumstances, there are some alternatives that we can use, but it is going off of 2019 payroll. So there are some things, and if you opened your business, say in early, let me look at the second draw, and it might even be effective on the first draw, but in some of the second draw language that we didn't get into a great deal today, it described a lot of the scenarios that were available. If you opened your business, obviously in the third quarter of 2019, you can compare that with 2020, third and fourth quarter. The fourth quarter was actually in 2020 fourth quarter compared to 2020 fourth quarter. And if you opened your business before, I believe it's February 15th, you can compare your 2020 results. Let me get back with you on this. It's not making a lot of sense as I say it. But there is a measure once we fully are able to digest all of the guidance that came out on that yesterday afternoon. Oh, can I review the requirements for the first time PPP applicants? And I apologize, we jumped over that a little bit today. PPP is one, if you are eligible for the first time, you go off of the first rules that everybody else kind of went off of back in March and April, moving forward up to when the portal closed or PPP closed on August the 7th. So what you have is you have basically the same rules back then. There are a few things that are different. There are a lot of things that we can provide you on the internet. There's a lot of things on the internet, a lot of our others. if you want to get some of the PPP1, or you can actually, a lot of that stuff is really readily available online, and you can probably find it a lot faster than me trying to provide it to you. But drop me an email and I can send you some of the requirements. But again, it's going to just be the first time filers that everybody kind of went through. Wrapping up questions. You mentioned the EIDL grant, and is it different than the EIDL advance you received last year? I know it's very confusing. We have 3 EIDLs. We have the Economic Injury Disaster Loan that is actually the loan, the disaster loan up to $150, still open. We had the EIDL advance that you received last year. And the purpose of the EIDL advance that you received last year was essentially it was received because they were wanting to get money to you before you received an EIDL loan, and they just based it on employees between 1 and 10. If you had over 10 employees, you received $10,000. If you had 1 employee, you received $1,000. So that was the EIDL advance, and the EIDL advance is important because of the reason is that now we have the EIDL grant. So now we have an EIDL grant, and the EIDL grant is just to make you whole if you received a smaller EIDL advance, smaller than $10,000. So if you received a $4,000 EIDL advance and you meet the eligibility requirements, you're now eligible for up to $6,000. I did get some email questions, and for some reason lately, my email ability to remember to answer the email questions that I receive have been a little deficient, getting old, I guess. So first question is going to be on the shuttered venues, save our stages. And I think we addressed this a little bit in the presentation today, but being able to, the dilemma that you're posted by choosing between PPP versus the shuttered venues. And again, what I would do on that is, since PPP, the application ends at the end of the first quarter, is I would apply, and then I would not take the PPP loan if you decided to go the other route. But I know it's a tough balancing act, but you will be signing loan documents for the PPP second draw to make it official with your lender. You'll be signing a promissory note and other things. So until you sign that, you don't really have a loan document, and you don't have really a loan, a PPP loan. And I believe the requirement will be that you have a PPP second draw or the actual shuttered venue grant. So I hope that answered your question. And the next one is, it started the company in October 2019, did not have full-time employees till February 8th. Now have 16 employees. Do we qualify for the second round of PPP? Well, you received a first PPP, so that's the good thing. You've got to meet the eligibility requirements of being down in any quarter, of which if you started in October 2018, having a 25% reduction in the fourth quarter of 2020 is probably going to be difficult, since you added staff and actually grew your business and started your business. So I think that might be the challenge that you run into. The EIDL grant might be something that you might be able to pursue. But again, that is going to go back, and SBA is going to generate that. And when we have more guidance, we will bring that along. Jumping in and running long as always into the chat. Because I see a lot of links that we have. Thank you, Maureen, for our links that you can grab and go right now and not even wait until later this week. Here's a good one, is the PPP loan forgiveness, new expenses available, PPE and supplier payments and covered operating expenses. My understanding is for your forgiveness application, those expenses that came out as far as suppliers, the amount of PPE you put in, the covered operating expenses that happened during your covered period can be used for PPP forgiveness. Very helpful going very nice bonus that was added to the stimulus for those that are stretching to reach that full forgiveness or full use of their funds. 45-day period on the California grant. You know, that's funding up to, I imagine they're doing that because they're expecting funding to take a considerable amount of time. I expect that they've already started funding some of them, and maybe they're leaving themselves a little leeway, a little time in order to get it done. Thank you for letting us know that some of the lenders say that they are going to be opening up next week. We're seeing in the chat box, you're responding that Wells Fargo is opening. Bank of Sierra says that they are opening next week, which was a little contrary to what I heard earlier, but you know, I just trying to keep up with 5,000 lenders in the program, you know. Some other questions: can the 3.5 for restaurants be applied retroactively for PPP1? I wished it could, Bob. I haven't seen anything on that yet. Perhaps it could. Perhaps it could, but I'm thinking that for PPP1, it is we're saddled with the 2.5. If I see anything, I'll let you know. Could come in future guidance, but right now it's for the legislation states it's for second draw. So the second draw for hard hit businesses are the 3.5. Thanks, John, for passing along borrowers not in business that I don't have at my fingertips. In 2019, they're in operation as of 2/15/2020. We'll need to demonstrate at least a 25% reduction in gross receipts in quarter 2, 3, 4 compared with quarter 1 of 2020. That was the one I couldn't remember. Recent. Can a restaurant that had been shuttered 8 weeks and receive PPP1 and applying for PPP2 apply for shuttered venue? Not likely. Sorry, not likely. It's pretty tight what they have as far as the entertainment venues for that particular grant program. And yes, one thing important, all PPP1 monies need to be used within that covered period before applying for the PPP second draw. Okay, that looks like what we have for today. We'll be back next week, and we'll be back hopefully with more guidance, more information, and webinar number 46. So appreciate everybody for sticking with us as we drag along again. As glanced at the clock. So Kelly Bearden reporting out here at the end of webinar number 45. Have a great day. We'll see you next week. Bye-bye now.